Hey everyone, and welcome to your crypto news flash. It has been a wild 24 hours with a whole lot of red across the board. But, there are some really fascinating things happening just under the surface. So let's get right into it. Okay, first up, the big one. Bitcoin is hovering just under that $110,000 mark. And it looks like the main reason for this drop is the cooling demand for those US spot ETFs. The capital flows have actually turned negative, and that's putting some serious downward pressure on the entire market. And listen, this isn't just a Bitcoin story. Oh no, this anxiety is spreading everywhere. We're seeing major altcoins down anywhere from 5 to 8%. Solana in particular has been hit hard. It's tumbled 8%, completely wiping out all of its gains for the year. And what's maybe a little worrying is that the on-chain analytics firm Glassnode is reporting that even the long-term holders are starting to sell. On top of that, retail traders, they are showing the most fear we've seen since that big crash on October 20th. So this is where it gets pretty interesting. You've got this split personality in the market right now. On one side, you have total peak fear among everyday retail traders. But on the other side, some of the technical analysts are looking at this one long-term indicator, and it's giving them a little bit of what they call hopium, a little dose of hope for the bulls. It's that classic battle, gut feeling versus the charts. Okay, so with all that red on the charts, you have to wonder, right? How are the big publicly traded companies in crypto holding up? Well, let's take a look at their latest earnings reports and see how the giants are doing. First up is Michael Saylor, chairman of strategy. You might remember them as MicroStrategy. And he is sounding really cautious right now. On a recent call, he basically poured cold water on the idea of buying up any rival firms, saying there's just way too much uncertainty for those kinds of big long-term deals. But, and this is a big but, here's the twist. Despite all that cautious talk, his company just posted a fantastic third quarter. We're talking an earnings per share of $8.42, and that was driven almost entirely by the on-paper gains from their massive Bitcoin stash earlier in the quarter. So the takeaway here is their balance sheet is telling a very different story than their M&A strategy. And you know what? Strategy isn't the only one showing real strength. Coinbase also crushed expectations. They pulled in a cool $1 billion just in transaction revenue for Q3. So what this tells us is that even in a choppy market like this, the major players, the big infrastructure companies, they're still seeing a ton of healthy activity. All right, let's pivot for a second. We're going to shift from the markets over to policy. Because away from all the price charts, there is some huge movement happening in Washington that could really shape this whole industry for years to come. And this is a really big deal. I mean, get this. Even with a government shutdown happening, lawmakers are apparently dead set on pushing forward with a major bill to create clear rules of the road for crypto. It just goes to show you what a huge priority this has become. So here's the breakdown of how this is all supposed to work. Step 1 is done. The House has already passed its version of the bill. So now all the action is over in the Senate. Key senators are negotiating a bipartisan bill, trying to find that middle ground. And the goal? The stated goal is to get a final, unified law passed and signed before 2026. This is probably the clearest roadmap we have ever seen for regulation in the US. All right, for our last section, let's do something important. Let's zoom out. Let's look past the day-to-day price swings and all the political stuff and see what's actually being built for the future, the tech and the long-term vision. And a perfect example of this is happening right now on the Ethereum network. The developers just locked in the details for the Fusaka upgrade, setting the date for December 3rd. Now, this is the second major upgrade for Ethereum this year, which just proves that the core development is continuing at an absolutely blistering pace no matter what the market is doing. Okay, now before I show you this next number, we need a quick definition for real-world assets, or RWAs. It's actually really simple. It's just taking traditional stuff, stocks, bonds, even real estate, and turning them into a token on a blockchain. Why? It just makes them way more efficient to trade and handle. And this, right here, is where you see the mind-blowing long-term potential. The massive investment bank Standard Chartered just came out with a forecast. They think the market for these tokenized RWAs could hit $2 trillion by 2028. That is a 57-fold increase from where we are today. I mean, a number like that really puts today's market dip into a totally different perspective, doesn't it? So that's where we are. You've got a market that's gripped by short-term fear. But at the same time, you have corporations that are surprisingly resilient, real progress on the regulatory front, and these just massive long-term forecasts. It all leads to the big question. Is the next chapter for crypto going to be defined by the bearish prices we see today, or by all the bullish building that's happening for tomorrow? That's the real tension to watch. Thanks for joining me.